Good morning, everybody. My name is Jalen Carter. I'm the Community Program Manager here at the Tulane Innovation Institute, and I am excited to welcome you again to part two of our Venture Funding Basics webinar featuring our very own Marco Melero. Marco Melero is a venture capital analyst at the Tulane University Innovation Institute, where he supports Tulane Ventures, a $10 million seed fund investing in tech-enabled startups across health, energy, and AI data sectors in New Orleans. In this role, he helps manage deal flow, due diligence, and portfolio support for early-stage companies. Marco also plays a key role in venture programming at the University Business School and is a Tulane alumni. Welcome, Marco, and the floor is yours.
Thanks, Jalen. Appreciate the introduction there. Hi, everybody. Thank you for joining us today for the second session. As Jalen said, I'm an analyst for the Tulane Venture Fund. I'll be walking you through our process at Tulane Ventures, and then also trying to help you understand what we're looking for at each stage of our process and some tips to be best prepared as you go through. This should serve as a guide whether you are going out to fundraise now or planning to do so in the foreseeable future. So big thank you to Sharon Goldsmith and Jalen for hosting me today. And then also shout out to Evan Nicole and Patrick Hernandez from 1834 Ventures who supported us, collaborated on part one. Quick background on myself, originally from outside of Boston, came down Tulane, studied economics, and have been working in the city ever since. So I've been with the Tulane Innovation Institute going on 2 years now. Without further ado, move forward into kind of overview of the fund. So the Tulane Ventures Seed Fund is the inaugural venture fund for Tulane University. Our vintage year was 2024, so that's when we first made our investment. And this is a $10 million SSBCI seed fund supporting opportunities for startup businesses and early stage small business and ventures in Louisiana. So it's a partnership between Louisiana Economic Development and Tulane University. As Jalen said here, our focus is in the following three verticals: health, medical, climate, energy, AI, and technology as well. So we are investing at the pre-seed and seed stage. Investment size ranges between $25,000 to $250,000. I think our average is around 200 for check size. At the pre-seed stage, we might be looking more towards a check size up to 100,000, and at the seed stage up to 250. But it's subject to the fundraise opportunity and how we're identifying the team. So we move on. So the Tulane Ventures team quickly. All this information can be found on our website, which is tulaneventures.com. Our bios are linked there. But we have Kimberly Graham, who's the Chief Innovation Entrepreneurship Officer of the Tulane Innovation Institute. She's the Managing Director of the fund. We have two new fund advisors, both Tulane alumni, Keith Rassin and Mark Raffanini, who are supporting us, and then myself as a fund analyst. Moving forward, we are also supported by our investment committee, made up of Tulane alumni who are experienced investors and operators across the entire U.S., investing at different stages of venture capital, as well as in different industries. So from left to right here, we have Andrea Turner-Moffitt, David Weiner, Krishna Koye, Rob Tucci, Rebecca Gavalt, Josh Burns, and Allison Plosco. So we thank them for their support and stewardship of the fund as well. Quickly jumping into our portfolio companies to date. We have made 5 investments. We have Nest Healthcare, who provides holistic value-based primary care for families. They're targeting Medicaid populations and help support through medical, behavioral, and social services. We also have Inframuta, which is a precision diagnostics company leveraging AI-powered sequencing to combat antibiotic resistance and rapid infection identification. Eric's Technology is developing robotics and AI solutions for industrial pipe corrosion detection, aiming to improve efficiency and safety. We have Hello Gravel, which simplifies the procurement and delivery of construction aggregates, gravel, and other which is an e-commerce platform serving DIYers, contractors, landscapers, and more. We also have Highlight, which is an employee recognition and data platform helping schools improve teacher satisfaction and retention through actionable insights and rewards. We also have additional commitments out, but today this is our current portfolio. So quickly, just wanted to brief us on the objectives of today. Wanted to overview our whole process step by step to orient you, discuss what might be too early to approach us, and then we'll go through and talk about how we screen companies, what are we looking for in terms of SSBCI eligibility. Then we'll go through the pitch, talk about data rooms, what's in them, what do we look for, and then quickly touching on the financial model before going into our expert review and then our investment committee process and how decisions are made. And then from there, we'll jump into Q&A and hopefully we can answer any questions you might have. So as far as our process here, high level, you'll start with an intake form, or maybe you'll be connected with one of our team members and we'll direct you to start the process through applying through our website at tulaneventures.com. The intake form, we'll get a quick sense of your business, and really we're looking to screen SSBCI eligibility and thesis fit. Following that, assuming that's all in place, we'll schedule a 30-minute pitch. If we like the opportunity from there, we'll go into a due diligence period and notify you. We request access to your data room, and we'll send you a checklist of items that we'd like to see. From there, we'll schedule a financial model review. We'll go through your business plan essentially with you, talking about how you'd spend your fundraising and where you're projecting to go after you've spent all the money. So following that, we bring in a third-party expert through our network to help validate and guide our investment decision. And then finally, we'd make a presentation to our investment committee, who will make the final decision on approval or passing on the opportunity. And then at that point, you would have a commitment from Tulane Ventures, and we just move into a closing phase. So there's some LAD compliance documents because we're part of the SSBCI program. And then there are some standard closing practices, legal work, and then we can wire in and would move into helping support you on the back end. So jumping into kind of some discussion on what's too early, still in the ideation or concept stage. So if you've just started your company, we'd at that point, if you applied in, we'd recommend that you work with our team at the Tulane Innovation Institute through our Idea Bank program. They would get you set up, have you start working on a business model, do some customer discovery at that stage, and further development. It'll be less common for us to invest at that early of a stage here. Certainly it can happen throughout the US, but that might be more dependent on if you're an experienced founder who's exited a company already. And so the investors are investing in you at that point. So no minimum viable product would be the next one here. So we'd want you to have some version of your product that customers could use. So if you don't have that, we'd want to see it. And furthermore, to that point, we'd want to see that you've been engaging with customers to get feedback in the development of that process and have like some engagement metrics or some early data or pilots in place. And then we'd also like to see that you have a financial model and data room set up. We'll get into like what a data room is. But we'd like to see companies using an Excel spreadsheet to map out how they're operating their business and keeping that up to date. So that's really important that we see it. We invest in C corporations as venture capital investors. We are looking to invest in preferred equity. So this is the easiest way to do that. So if you were an LLC, we'd hopefully request that you'd be converting to a C corp during the process. And then the other thing is, of course, if you're not a clear fit with the fund thesis, whether that be stage or sector, you might want to think about that again before applying in. So moving into the screening section here, our intake form has maybe about 20 questions, and we're collecting company contact information. Who is the founder? How can we reach you? But ultimately, we're looking to validate that you fit our stage and sector. So are you at pre-seed or seed stage? Is your valuation cap below 15 million? Is our target sweet spot? Are you within one of our sectors? As this was discussed in the first webinar, but we are investing on our thesis that we promised to our LPs. So that's the first thing that we're looking for. And then the SSBCI eligibility is the main other piece. And I'm going to talk about that on the next slide. But other than that, we'll ask you to submit your deck. And at that point, we might check on LinkedIn or your website to make sure the information is consistent with what you've applied into. So it's really important that you keep your social media channels and websites kind of aligned with your deck as you go through. So moving into the eligibility here. So the main thing that we're looking at is this top bolded one, that your company is authorized to conduct business in Louisiana and maintaining an office here. Obviously, if we're investing at a pre-seed, seed stage, a lot of times a company might have 1 or 2 founders and maybe a few other employees. So really, we don't run into the issue of small businesses with 500 employees or less. And then I also want to list this here. This information lives on LED's SSBCI program, seed capital site. And again, this is not an issue that we run into. So we really focus on that top piece, but the eligible business purposes for the capital that you're raising would be startup costs, working capital, business procurement, franchise fees, equipment, inventory, and then construction, renovation, or tenant improvements. So you can take a look at this. This would exclude activities such as commercial real estate ownership and the purchase of securities and lobbying. So really, we're focused on the top piece, and the rest is kind of verified throughout our process. Going into some of the ineligible business purposes, just so everybody knows, through the SSBCI program, we are not able to invest in gaming or gambling companies, pyramid sales, financial services, speculative real estate, owner-to-owner buyouts, refinancing, recreational park, theme park, amusement park, or camping facilities, and then business engaged in activities prohibited by the federal law to include direct and indirect marijuana businesses. And this is because this is a federal program and those funds trickle down to the state. So we're abiding by the federal guidelines here. All right. So now that you all know about the SSPCI piece, just going to jump into the pitch expectations. What are we looking for on a pitch? So this is our first real interaction with the business. Before that, we might have just met you on a call or out in the community at an event. So we are evaluating the business. The first call is connecting with the founder. Early stage investing is really driven by conviction in the founder themselves. So this is also this could be the beginning of a multi-year relationship. So hopefully we're getting along and there's open communication there. So we're evaluating you just as much as the business again. How are you storytelling? This is really important to show us not only that you're able to fundraise to us, you're able to fundraise from other investors. You need to be able to sell your product to the customers. And then you also need to be able to sell your company to hire a quality team. So this is really important. People say it all the time, you're going to be pitching constantly. So constantly work on your pitch, short and long versions. This is a key part of the process. And, be confident and open. We want it to be natural, and conversational. So, we don't want to see you kind of reading from a script at that point. We want to really tell that you know your business. And then the second point here is, being receptive to feedback. We're not always right about our decisions, but we might have opinions on items. So we might give you feedback throughout the pitch or, throughout the process. And it goes a long way, especially in developing that relationship, to see that a founder is receptive to feedback. So that's really important to note. And then as far as some other things here, we really want to see that there's a meaningful problem that needs a solution. So the question you might want to ask yourself, is this a must-have or a nice-to-have? We're looking for these solutions to be lasting and really solve a problem. And this needs to be urgent. So that's a question that I would make sure you ask yourself and kind of be prepared to answer questions around or frame your business kind of around that context. Moving on to like the market piece here. So this is your TAM, SAM, SOM, but we're going to want to see you guys do a bottoms up market sizing. So this might look like, we know we're selling our product for $100 and there's 100 businesses out there that we've identified would be our like first company. So showing that is your market size, that's like the potential that you see. And then you're going to essentially show us how you're going to close those initial customers. And then from there, you'll grow out into the additional customer segments that you're targeting. So the market will be a combination of, yes, we want to see that this is, $1 billion+ market that's growing. But we also want to see that you're connecting your pricing, your product, your strategy to that market, and clearly identifying that, showing who exactly your customer is, showing that you know your customer, how many of them are out there, and then how you're going to go about doing that. So it's a combination of a few different things. And then we want to understand like, how much better is your product or faster or cheaper than alternative options on the market. So something to note here when we're talking about competition, we don't like to hear, there's no competition. There might not be somebody in your space, but, customers might be using other products or maybe they're just, what's like the alternative solution of just like not using your product. So we still want you to look deeply into the competitors, understand the landscape, what niches are they filling, understand, what level of funding do they have. So this is important as well. And then going to early traction and customer insight, we'd love to see pilots, LOIs for maybe more deep tech. This might be SBIR, STTRs in place. We'd love to see usage and testimonials to help us validate that your product is actually meeting a need. And even better would be if you've kind of iterated, developed on your product based on that customer feedback, and you're seeing improvements from there. So also just to note, like no traction or no revenue is okay at the early stage, but we want to see that you're moving in the right direction and clearly taking the right steps to get there. And then a quick note on the fundraising ask. So we recommend that companies are raising for 18 to 24 months of runway. So this would be covering your expenses over that time period. It's one of the biggest reasons startups fail is running out of money. So we want to make sure that you have ample runway. Don't raise money for like 6 months and you only have one shot to execute on your plan. We want you to be able to iterate and grow your team. We'd like to, within this point, like we want this to be specific. So we don't like to see you say we're going to raise anywhere from $1 to $2 million. It's a large difference of $1 million. So, just because we're going to give you more money, we want to see that it's being used for a specific purpose to get to a specific milestone. That's going to get you to a point where you can raise capital again or sell your business or whatever your goal is. So this needs to be highly specific. We know that it's going to vary, but we want to see that you're thinking through everything at a very detailed level and able to articulate that. And then kind of moving into, we just talked about the competition, so I'll move over to that. But we need to see a concrete go-to-market plan here. So who are you targeting? Kind of goes back to the market piece there. Who are you hiring to target them? That will tie into how much money you're raising. it will tie into your ability to recruit people at that point. And that should tie into your model, and also factor in, sales cycles and identify the challenges that you're going to face. So that's what I say as far as pitch expectations can be founder heavy, but those are some tips as far as some insights that we've seen with companies over the past year and a half. So hopefully that can be helpful to you as you're thinking about how to present your business to venture capitalists or to Tulane Ventures as well. So we recommend that you just use a standard kind of like Y Combinator template here, just to keep everything in one place. And then if you have additional information, put it in an appendix. And if you get asked about it, you can bring it up at that point in time or later in the conversation. So title page, problem, solution, traction that you have, any metrics or revenue, what is your go-to-market strategy, discussing the competition, market landscape, and then following up on that differentiation, explain to us your business model, your market team, and then your ask and your fundraise. So those are the slides that we recommend, and people put them in different orders, but make sure you got those in there, and then you can supplement it with additional data or other slides that you think are valuable in an appendix section. Okay, so quickly on the data room here. So assuming that we were to, really like you as a founder and like the business opportunity, we would then ask you to share your data room with us. So this is just an organized folder structure. People use Google Drive, Dropbox, Box. There's other offerings out there, Carta included. This is just going to be essentially a library of files about your business and your strategy. So some of the minimum required materials that we'd like to see here is definitely have your pitch deck in there. We want to see the market and the go-to-market plan. It should be a product roadmap. And if there's any technology being built, we're going to want to know what you're using to build it. Customer traction. If you have customer traction, we'd want to see any letters of intent, testimonials, contracts that are in place. Certainly want the 2 to 3 year projected P&L here. That's going to be the financial model on Excel. Cap table at an early stage. This might just be like one founder 100% or 2 founders 50-50 split, whatever it may be. We want to see a cap table in there to understand how the ownership is split up and what are the incentives. And then if capital has been raised previously, we're going to want to see the fundraising documents. So any previous safe notes, side letters, convertible notes that you guys have signed. And then team bios and an org chart. So that's also going to be pro forma. So, who's on the team, what are their roles? If you're going to make hires with the capital, we'll want to know who's going to manage them or what their role will be. And then we're going to want to see your incorporation statements. And then if you have IP, we'll want to confirm that is assigned as well. So we'd recommend you keep this updated and clearly labeled. I'm just going to quickly jump over, built a quick mock data room here, just so you can see what it might look like. It's going to be, you can organize it however you want, but after you send us the documents, at that point, we're going to organize it into these different folders. So, for example, you have your company documents, and this might be your corporation statements, your bylaws. Within your financial information, you might have your previous 3 years of revenue, your cap table, and your projected P&L statement. So it's just a library of all your documents. And this is what we request that you keep this, up to date for yourself. That's good practice. And then if you're going to be raising money from investors, you'd make a copy or share this with them and put in the files that are requested. From there, they might have, additional requests to supplement. So that is what we will be working off of together with you. Let's jump back over here. So then as far as the financial model call is our second call in the process after the pitch. So after we review the data room, we might have additional requests from there, and then we'll move to set up a financial model call. What this will look like is 30-minute call on Zoom. We're going to want to see, go over the next 2 to 3 years. So if you're fundraising 18 to 24 months, that's the time period we're going to want to cover. We want to know, all right, this capital is going to get this company to $1 million in revenue by the end of year 2. And at that point, they will be fundraising their next round. Some tips within that, or I'll quickly, so what we'll go through is we'll start with expenses. We'll walk through that with you. You'll explain that. There might be some conversation of, if you're hiring somebody, what is the salary like? What is their role? How's that tie into driving the revenue? After we go through the expenses, we'll jump up to the revenue, see how that is being modeled out. What are your assumptions? Are they realistic? We don't necessarily need to see you jumping from no revenue to like 10 million in revenue within like 1 to 2 years. As Evan and Patrick had stated, we just want to see that there's a path to scalability, and you're being realistic about those assumptions. That's not to say that it couldn't happen. It could, but more times than not, it won't. So factor in the realistic churn rate. Customers aren't just going to renew every single time infinitely. So we're going to want to see some realistic assumptions, and that tells us a lot about you as a founder and how you're thinking about your business. Again, and how are you making decisions based on the information that's available to you. So we recommend you build this in Excel. We're going to want to go in there, check the formulas, check your assumptions. We might model it ourselves in the back end. So if these things are not available to us, it's going to be extra work, or indicate something's maybe being hidden, or you're not being transparent with us. So it's really important that that is upfront and honest communication. We're there to help support you in the event that we are going through this whole process and making an investment. We want to be working with you, giving feedback, and ultimately when we make the investment, working together, being on the same page moving forward. So keep that in mind. We're out here looking to invest in companies and support their growth. So as much as we are asking questions that might be probing, we're just looking to understand the business and see if this is going to be a fit moving forward. So we kind of touched about this on the market side, but using bottoms up logic, mapping out how many customers are in your market, that should be supported by some research. What is your pricing model? And then tying that together and projecting some level of growth over time, based on what you think you can do with your sales team, and then communicating that to us. We'd like to see that actuals are up to date. So if your model includes the past 3 months, and then it kind of transitions to the next 2 to 3 years, we want to see that we are having the most up-to-date model when you're presenting to us. Connect your expenses to your hiring plan. We want you to be realistic about your sales team, your ramp up. The salaries are being projected on a market standard. So we wouldn't want to see you hiring AI engineer for, let's say, $30,000, because we then assume that you're going to have trouble either hiring the AI engineer and keeping them recruited, or we have suspicions about the quality of that. Again, here, matching your fundraise to the 18-24 months of runway, and that being shown in the model. So typically we'd like to see that being accounted for without the revenue factored in, because the revenue isn't guaranteed at that point. And then show us your milestone-based planning. So when we talk about milestones, we want to see, once you spent, say you're raising $1 million, once you've spent $1 million, what are you going to have achieved at the end of that time period? Let's say that could be $1 million in revenue with 500 customers, or a new product line, or some FDA clearance. That should be very clear that you're working towards those goals, and those goals enable you to raise the next round of funding and maybe that takes discussions with other investors at later stages, or discussions with entrepreneurs who have been successful within your field to understand what kind of things you need to look for, and kind of plan around and raise to get to. Again, here, mentioned this at the beginning, but avoid hard coding your formulas. And then, add notes for any clarity as we, are having conversations on the financial model. All right, moving forward, this is the third kind of like call within our process, is the expert call. We're going to bring in a third party. Typically, this might be through our network at Tulane or our Green Wave Innovation Network that we have at the Innovation Institute. The way this call will work is they'll either be looking at the technology and validating it, or they might be giving us some insight, as a customer into the industry. So you'd give the expert a short pitch. They might ask some technical questions, and then from there, we'll debrief with them after to identify risks or gaps. And this is supposed to be productive for companies in our process as well, to the extent that it's possible, and we can get a customer on the line, and we end up investing. That's a beneficial relationship for everybody within the process. And make sure you're kind of taking feedback, as this could be an important customer discovery call as well. So at that point, those are the three main calls that we'll have, but this will also be supplemented by additional calls. Let's say we're looking at something in your data room, or we have additional questions around your strategy. We might schedule calls at that point as well. But the three main calls that are guaranteed to have are the pitch, financial model, and then an expert call. So then I'll just quickly move in from there. After that, we would be presenting on your behalf to our investment committee. So the founders do not attend that. Out of that meeting, you'd either get a yes, a no, or there might be follow-up questions. At that point, we'd have some additional due diligence meetings, and then we'd request that our investment committee submits via email their vote from there. And then following that, you would have a commitment, and we'd move into an LED eligibility review. So this is required for all SSBCI investments. We have 2 to 4 forms to complete, including providing certification that the SSBCI funds are being used for eligible purposes and there's no conflicts of interest present. Provide certification that no principals have been convicted of a sexual offense against a minor. We have certified that whether a business is socially and economically disadvantaged, individual owned, and then reporting demographic ownership of your business. Those last 2 are optional, but highly encouraged. And then we also will collect information on your EIN, NAICS code, census tract. We'll have to report in your revenue, net income for the past year. And then we also collect information on job creation retention figures. Again, as we had talked about at the beginning, the main piece that we're looking at is that you're authorized to conduct business here and maintaining an office here. So let's say your headquarters out of state, we would request our firm, this is not mandatory, but our firm would request that you send a letter in to outline, what is your active presence in Louisiana, like what is your office doing here, and then if there's any plans to expand, we would want to see that as well, to ensure that you're actually here to support the Louisiana economy. So past closing, some tidbits on some of the things we do here at Tulane Ventures. We do not participate in rolling closes unless we are the last money in. Our investments are typically conditional on the full round being committed. So if you're raising $1 million, we would want to see that full round be raised. And we recommend that you put that into an escrow account and held until you get, let's say it's $1 million, until you get the full $1 million. And at that point, you'd release the funds to be able to spend from there. So that is just for safe stewardship of the capital. We want to be, transparent and honest about how much cash is being used, and ensure that you actually have the proper 18 to 24 months of runway to execute on your plan. We also have a legal review of our investment documents prior to signing. We do not typically lead, but we have one deal, and if we do, we've been using the Y Combinator safe note and side letter to get pro rata and most favored nation rights. And then just a word here, fundraising can take 6 to 8 months or longer, especially down here in Louisiana. We've seen fundraisers take an extended period of time. So it's important that you plan around this as far as when you start your fundraise, being realistic about how long it might take to close your round, and managing your cash if you're currently operating your business. And then also it's kind of a note to, you should constantly be fundraising as a founder, talking to investors about the next round, keeping them in the loop about your progress. So fundraising is really difficult, but assuming we'll try to do our best to help you. Some of you are one of our portfolio companies, and so what that looks like is we might help with syndication of deals or make introductions through our network. And yeah, moving on from the closing, that's kind of it for what we have as far as our process, start to finish, and kind of some tips that we've kind of layered in there throughout. So at this point, just throwing our links in here, TulaneVentures.com. You'll be able to find a pitch to us button that'll send you to our intake form if you're interested. You can read more about the process in detail on our website. That kind of covers what we're looking for and some of the things outlined in this presentation. And then feel free to reach out to myself or anybody on the team if you're interested in just getting to know us or getting some advice before you apply or are curious about the local ecosystem. So without further ado, I'll kind of move into Q&A.
Thank you, Marco. Y'all are welcome to put your questions in the chat or just say them out loud.
Hey, Marco, my name is John Ross. I work with mentoring some of the founders through the program. You talked quite a bit about milestones and the time to get there to help these founders stay organized as they go through the process. Is there any piece?
No, we don't have a current standard Excel model available. It's kind of would depend on what your business is doing. Yeah. But if you have questions about where to start, we're happy to connect and provide some resources as to where to start with that.
Great, thanks.
Is there an example spreadsheet that you're looking for? I mean, you suggest we have an Excel financial model. Do you have one available for us that we could fill in so we see exactly what you want?
Oh wait, sorry, I was muted. Can you repeat that? Apologize.
You're requesting an Excel spreadsheet of the financial model. Do you have an example so we would have it laid out the way you'd be used to seeing it, and we'd have all the information, all the links and information we need to fill it in?
Yeah, so we don't have a standard model that we have been recommending people start out with, but happy to provide a resource to that, maybe in a follow-up email as to where to start. But it'll vary, business to business on what is your plan. So we'd probably recommend you start, planning out your expenses, projecting that, and then tying that to your revenue as well. So we don't currently have it, but happy to provide a resource about a starting point.
Okay, Marco, thank you so much for that comprehensive. Oh, we have another question. Let's see. Do you seek professional help to develop data rooms?
I'm sorry, I feel like I can just ask that question.
Okay.
Yeah, but like, do you recommend that we like, maybe reach out to somebody who has already, developed data rooms to as we are going about making our own? Like speaking to some founders, they say they used a lawyer to help them develop their data rooms. I'm just trying to see what's the norm here.
Yeah, at the early stage, we've just seen, I think there are some companies that have worked with consultants to kind of set that up. I could see like the value of working with a lawyer to set up your data room, especially if you have intellectual property. A lot of venture capital operates kind of under an assumed NDA. If not, they're under NDA, and you kind of have to be careful about who you're sharing information with. So you should kind of have all your company files for yourself, and then as far as like what you want to share out to investors at that point, there certainly could be value depending on how your business is set up and protecting some of that information. But at early stage, we haven't seen it at like pre-seed, seed stage deals for most companies, especially, you are have to be conscious of your budget as well.
Thank you.
Hey Marco, great job with the presentation. One quick question. You were mentioning the expert review, and you mentioned that you guys reach out to people in your network, experts for specific areas. Can you talk a little bit about that in terms of whenever you're reaching out to these experts, specifically what you look for in them, or how can they be partners, I guess, in this case?
Yeah, so it'll depend on our analysis of the business and our skills in the team that exist. So if it's an area that we don't know too well, or we don't have operating experience on the team, or from our investment committee, we'd certainly look for people with track records of either like having businesses within that, um, having startups within that space, or if they have deep research experience. That's something else we would look for. And then as far as the other part of that, we might look for customer profiles. So that could be identified through um, discussions with the company on who they're looking to sell into, and then from there we target the key decision makers within that organization or within our organization, who can help give insight as to whether they would purchase, or what are they looking for before they make a decision.
Got it. Thank you.
Oh, I had another quick question. Um, So for companies that, that have to go through, let's say the FDA, like just some regulatory bodies, that kind of like limit you from like having initial customers, right? I guess, what do you evaluate? Do you evaluate them differently, or are there other metrics that you would use when assessing if you're going to invest in them?
Yeah, we're definitely looking at different metrics. We recognize that's like pre-revenue. So understanding, the market, at what point these companies would be purchased, you know, what is the path to get these FDA clearances, or we're as far as traction, we might look into like SBIR, STTR traction, partnerships, research data that you have available. So certainly like on, biotech companies is likely what you're talking about. We'd be looking at different metrics and bringing in experts to evaluate that in the market.
Thank you.
And I guess look further to that point, your financial model will likely look a lot different. So that call might maybe be more focused on like a roadmap of like how you're going to get to the FDA clearance, and what data and data metrics you need to get to in order to prove your validation. So for biotech companies, it might look that part of the diligence might look a little bit different than a company that's selling software.
Yeah, that makes sense. Thanks.
Okay. Thank you, Marco, again, for such a comprehensive overview of venture funding and the Tulane Ventures process. Some of the nuggets that I took away from this webinar, sometimes you're too early, right? We want to see things such as customer discovery and feedback, financial models and data room. You have to be a C Corp, and then make sure you have a right fit with the fund thesis. Pitch expectations include being receptive to feedback, that your product is better, cheaper, faster, and then your competition, realistic fundraising ask. I thought that the data room walkthrough was excellent. I'm definitely going to be going back through that on my own. And then we got to learn a lot more about the financial model process and just all the different gateways for our entrepreneurs to go through. So thank you again for that, Marco. Really appreciated this webinar. Please stay tuned with us. If you are in New Orleans, we are having our very own Startup Ecosystem Innovator Happy Hour on September 23rd, 2025 from 5 to 7 p.m. over at the New Society. During the month of September, we are going to have our IP and Innovation Workshop series. So I hope you'll join us for some of those. And then we've got one of our favorite events of the year, Open Mic Night on October 28th, 2025. So thank you again for joining us. We'll see you next time. Have a wonderful day.